Hi, good morning and good afternoon to all the participants. We'd like to welcome you all again to our masterclass session today. The topic being Boost Order to Cash Efficiency with Digital Assistance. And I'd like to now invite John Salick, our masterclass speaker, to get started with the session. But as we begin with the session, we'd like to request you all to post your questions on the chat window of WebEx. We will be answering those questions during the end of this session. Thank you very much. John, over to you.
Thank you, Akshay. Got an interesting program for you today. It's a new but proven technology that if you have a high degree of manual operations in your order to cash functions, it's a technology that can bring substantial productivity benefits through automation, substituting automation for manual labor. And it's fairly easy to implement. It's not a budget breaker. It's not $500,000, $1 million or anything like that. It's a more of a tactical technology implementation than a transformational one. Although if you're primarily manual, if you implement this technology, you may consider it transformational, as it eliminates 70 to 90% of your manual work. So it all depends where you are. So interesting topic. I'll give you a quick introduction. Definition of digital assistance. With a lot of the new technology coming out today, there seems to be multiple definitions of the same terms. So we want to define exactly what it is we're talking about and what we mean by digital assistance or artificial intelligence powered digital assistance. Then we'll get right into the benefits for generally high volume order to cash sub-processes and illustrate where digital assistance can automate those functions. And we'll share with you 2 customer success stories, wrap it up with a conclusion, and then answer any questions you may have. All right, just to level set here, to use an IBM term, as I mentioned, AI-powered digital assistants can perform 70 to 90% of manual operations. So if you are primarily manual, there's a potential here to deliver enormous efficiency improvements. They also improve the accuracy of these operations, the speed, and hence the response time to your customers. We'll get into this in a bit, but they're particularly well suited to order to cash. Certainly they can be used in payables, order entry, a number of other functions. But order to cash benefits greatly from this technology. And just to reiterate, they're operating today. AI-powered digital assistants are operating today in many companies, assisting their employees and their customers. And this is not an emerging technology that we hope to be on stream in 2022. No, it's up and running now. So what are digital assistants? Let's give you our definition. Again, also known as AI-powered digital assistants. Well, what do? They assist your workforce. They can also provide information to management. Also, very importantly, they assist your customers and can actually engage with them to a fairly high degree. And of course, they can do that 24/7, 365. So if you've got a fair number of small and medium-sized businesses among your customer base, what we have found is typically those companies handle their administrative tasks in evenings or weekends. So the ability to engage with them and assist them in those administrative tasks 24/7, 365 is a big advantage. Digital assistants perform repetitive tasks. Great. That way human beings don't have to do that. And basically, we'll get into this in more detail, but they read and extract data from documents. Those documents can be in virtually any form, but are typically unstructured, and convert them to structured data. So think about that statement. Read data, extract data, convert them, key punch them into structured data. And many of the downstream functions require structured data. You can't deal well with unstructured data. How do they do it? Well, a blend of technology, terms you've heard and read about in the last few years, artificial intelligence. But a key capability here is the machine learning or self-learning. That's what enables these digital assistants to improve their efficiency and effectiveness over time, because they learn the different formats in which your customers are submitting data, and they get better at reading and extracting data. So when they may start out being able to extract 85% of the data from, say, a remittance advice, over a short period of time, they can increase that to 90 to 95%. So that's really what we mean by machine learning. You've heard of deep learning, heard of neural networks, natural language processing, which is very important because it's an enhanced ability to interpret text and voice. And of course, very easy and completely integrate with your ERP, or plural, ERPs plural, particularly if you're a shared service center. All right, so that's what digital assistants are. Let's get right into the benefits that they can bring to four key order to cash functions, which are generally heavy volume. Let's start with credit. What can they do for you? Well, first of all, they can secure a completed online credit app from the applicant. So you got an applicant says, hey, I want to do business with you and I want to open a line of credit. Let me submit a credit app. Well, you direct them to the online credit app, which is administered by a digital assistant. And what's nice about it is the applicant cannot submit it until it's completely filled out. So typically there's a lot of time lost using a paper manual, other format of a credit app. Customer says, all right, great, I filled it out and I submitted it. And then you look at it and you say, well, you didn't fill out lines 12, 14, and 19. So please fill it out and resubmit. So this back and forth, that's all avoided with an online credit app. Can't submit it unless it's completely filled out. Then you got the credit app, you want to check references. Well, the digital assistant can get the bank and trade references, your credit bureau, your DMB, your Experian, and if it's an existing customer whose credit limit you want to just update, can research the payment history for you. Verify business licenses, sales and use tax, legal names, legal addresses, all that stuff. And then actually perform the credit scoring. Now, you have to set the parameters. A DMB score of X converts into a $20,000 credit limit. You've got to set that all up. But once you do, digital assistant will automatically score, and then can also recommend a credit limit. So a credit score of 90, monthly requirements of 50,000, that converts into a credit limit of $70,000. And of course, you'll also want a credit professional to review these credit limits, especially the higher value ones. And then the digital assistant can route that credit limit, proposed credit limit for approval through whatever your delegation of authority policy are, and also trigger the periodic credit limit update process. So it does a lot of work, sets the table for your credit professionals, and eliminates a lot of the manual work. All right, how about collections? Well, a lot of work can be done here too. And when you talk about portfolio coverage, most collection groups that I've worked with, they have trouble getting to the smaller past due accounts. By getting to, I mean contacting. So while it's not a large amount of money, it tends to age and creates a significant bad debt risk. So digital assistance, particularly when paired with a customer care portal, can drive a pretty good collection effort, automated collection effort for these small and even medium-sized accounts. I mean, the AI-powered digital assistant emails a collection inquiry to the customer. Says, hey, we noticed there's 3 invoices that are more than 10 days past due. When can you pay the $22,000? Now, the customer, a lot of customers will respond to that. And digital assistant will say, do you want to pay now? And a certain percent of customers go, yeah. So the digital assistant should guide them through making an ACH or other payment. Or if the customer says, yeah, but not now, I'll pay you next Tuesday. Fine. Digital assistant will post a promise to pay, PTP, in the collection application and do an automatic follow. A lot of customers will just get this email, ignore it. Ultimately, they'll be turned over to a human collector for follow-up. Or question comes in, you owe $22,000, that's over 10 days past due. Can you pay it today? Answer, no. Well, then the digital assistant comes back. Can you pay tomorrow? Customer says, no. Oh, can you pay by the end of the week? No. Digital assistant comes back. Well, when can you pay? So there is this dialogue. There is this follow-up. It will impact a pretty good percentage of customers to respond with a desired response. And those that don't then have to be followed up by a human collector with a phone call. But if you can cut through half, 2/3, 3/4 of your smaller accounts who will probably not get a call from a collector until they're seriously past due, can really improve your collection results. And again, engages with the customer, can assist them make a payment on the customer care portal. And certainly the benefits for this segment of customers: better cash flow, lower AR DSO, reduces that bad debt exposure, which is probably the biggest threat from these smaller accounts, and certainly increases collection productivity and collection coverage. So nice benefit here. Nice benefit here. We get to cash application. This is where, in my opinion, AI-powered digital assistants bring the biggest benefit. Again, we talk about extracting and downloading data. Well, this is where the rubber meets the road, because in Cash App, we're talking about automatically extracting remittance data from a wide variety of sources and documents in a wide variety of formats, enter the data, and then auto-apply the payments. I mean, as someone who has seen Cash App evolve over the last 40 years, from manual, OCR, optical character recognition, which means you deal with images on your screen rather than paper documents. In its time, that was a nice advance. Robotic process automation can be effective on an account-by-account basis, but it requires structured data. And doesn't measure up to artificial intelligence. So let's probe a little deeper here into Cash App. What are the benefits? Well, the digital assistants extract the remit data, and they can extract it from virtually whatever form and format that the customer submits it. And this is where the machine learning comes in. So the digital assistant sees the Walmart remittance and says, okay, so our invoice number that they're paying is in the second column from the left, and remembers that. And then the target remittance comes in, and oh, our invoice number is in the second column to the right, or from the right. So it remembers and learns that too, so it can hone in quickly on the information that's needed, and then of course downloads that into a file. And in this process, it's converting unstructured data into structured data. And I've got that highlighted, bold-faced, because that's a critical function. Unstructured into structured data, because that's what's required for further processing. And then the digital assistants combined with the Cash App module automatically apply. We've seen auto cash hit rates of 85 to 95%. And what's also nice is the digital assistant can automatically create deductions to be routed for resolution. And we'll go into that a little bit more later. And again, round-the-clock operation and access from all types of mobile devices. Again, small, medium-sized businesses, they may be paying your invoices through any of the new fintech methods, Venmo, Square, from a mobile device. And the digital assistants can accommodate that. So very, very handy to have. Very accommodating of your customers. Let's go just a little deeper into this on what they do. They're extracting the remittance data. And I say from multiple sources, such as the customer vendor portal, right? More and more of your customers are implementing customer vendor portals. And basically what they're saying to you is, you got a question about your invoices, go to the vendor portal. Don't call us. Now, they may be a little nicer than what I just expressed, but that's the intent. Go to the vendor portal. Well, here's where the machine learning comes in very nicely too. It learns the idiosyncrasies of the vendor portals, and which there's pretty wide variation. Can extract the data from your own EIPP portal. So your customers go on your portal to check their invoices, the status of their account, make a payment, input the remit data. Well, there it is on your own EIPP portal. Digital assistant can go and get that. And then there's just a plethora of Excel, PDF files, statements that you get from customers and your lockbox with the remit data. It's also nice, it can also extract this data from your EDI and BAI transmissions. And typically, most companies will trade with a number of their larger customers on EDI. So there's a lot of remit data coming in there. Nice to be able to extract that. So the digital assistants can get this remit data from multiple sources. Similarly, it can extract it from multiple formats, as I illustrated before, and can auto post the cash receipts to the right invoice. Integrates easily and nicely with your banks and with your own AR modules in your ERP system, has the auto cash engine, has a nice feature where you can preset the tolerance levels. So what do I mean by that? Well, let's say you have a $900 invoice, and the customer pays $898. leaving a $2 short payment. What do you want to do with that? You want to set it up as a deduction, have somebody research and resolve it, or do you just want to write it off and say, hey, that's close enough. We'll consider this invoice closed. Well, Digital Assistant can do that, and you can set that write-off tolerance anywhere you want, 25, 50, 200, 300, whatever. And this is where it can really cut down manual work. And also the AI outperforms the RPA when dealing with the unknown document formats, and as I said before, the unstructured data. All right, the last sub-process we want to look at is the deductions, and we mentioned that a little bit earlier, but it automatically creates the deductions and routes it for resolution. And in that routing includes as much of the required information as is available. Customer number, invoice number, payment, how much did they short, did they give a reason code, the dates, and routes it to the assigned resolver. And that's important because when you look at deductions, remember, 95% of them are valid. So how much time and effort do you want to spend on basically issuing credit memos or processing adjustments to remove those deductions? And the answer is very little. But about 5% are invalid and can be recovered. One, if you prove your case, and two, respond quickly. You try to collect an invalid deduction that's more than 90 days old, your chances are not good. So getting them resolved, identify the invalid ones, and charging those back to the customer quickly is the key to collecting them. And it all starts with creating the deduction and routing it to the responsible person. And with full information, stores the images, executes the automatic write-off, and then once a credit note is issued, it can automatically match that credit note to the deduction, clear it, wipe it off your AR ledger. And you know, when we talk about routing, does what needs to be done. Formatted message to the resolver saying, hey, you got 5 days, 7 days to resolve this. Here's all the information. And when you've completed your research, if a credit memo is warranted, let's route that credit memo request through the approval hierarchy, and then comprehensive tracking. So none of these deductions fall through the cracks, and of course, comprehensive reporting on that. It can also do some internal dunning, right? You had 5 days to resolve this deduction. It's now 7. Need to take care of this. So what are the benefits? Well, we've been talking about them all along here, but certainly if these 4 functions that we've covered are still being done primarily manually, you can really see an increase in productivity and morale because it takes the grunt work out of these jobs. With the collection follow-up, can improve your AR aging, can give you faster response to customers, and overall increases the accuracy and quality. So at the end of the day, it's a better customer experience. It's and it's freeing up resources for other higher level duties. So a couple of quick stories. One of the Emagia customers is a global medical products supplier, operates globally on SAP, 30 countries, multiple languages, multiple currencies, implemented these digital assistants, deployed them for deductions, cash app collections. And what were the results? Well, the resolution cycle time for deduction reduced to an average of 5 days. Well, that's great for 2 reasons. One, we talked about the invalid ones. If you want to collect them, you got to jump on them quick. And 2, all these valid deductions, those AR balances cleared from the AR ledger. Auto cash, huge increase in the automatic hit rate from 50 to 80%. And all this in combination helped to reduce the DSO by 7%. Another client case study. focuses just on the credit approval process. This was a company, fairly new company, had some nice new products, was growing fast, was very anxious to sign up new customers, but their credit vetting process couldn't keep pace. It was just taking too long. So they deployed the Emagia digital credit automation solution with the digital assistant and implemented the digital credit app, the automatic gathering of credit data, integrated it with the client's tools. Key function here for this client was verifying the resale tax-exempt certificates. The end result was it automated over 80% of the credit vetting process. So now they're able to keep up with the volume of new customers that they're enrolling, and they're getting that turnaround time on credit apps down to 2 days, which is just great. So what can we conclude from this about AI-powered digital assistants? Again, they're being used by many companies today. If you're fully manual, you can see productivity increases in the order of 70 to 90%, which is huge. Also enables faster response to customers, like the case study with the credit apps we just talked about. It also improves the accuracy. Your questions.
Thank you, John. Let's get to our first question. Where within the credit vetting process are the labor savings achieved?
It's in the gathering of all the inputs that a credit professional needs to render a credit decision. The bank references, the trade references, your credit bureau, whether it be D&B, Experian, or another one, Credit Risk Monitor, whatever. Getting all that information together. Just getting it is a big job. And then secondly, it can process it and derive a credit rating. That eliminates most of the work and elapsed time and work time from the credit vetting process.
Thank you, John. Let's get to our next question. When the digital assistant is involved in collections, isn't just automated delivery of dunning letters?
It's more than that because of the dialogue that it conducts. Now, you can get a customer that's just obstinate, says no, 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 no to every query that the digital assistant posts, in which case it's turned over to a human collector. But for a good percentage of customers, they will respond to the digital assistant's inquiries because they know they owe the money. They know they're going to have to deal with it. And if it's past due, they know that's a negative condition. So they have incentive to cooperate with the digital assistant, which makes it a little easier for them. And you get some good results. You'll get some pretty good response from over half your customers from these digital assistant queries. So it's much better than a done letter or a done email with the follow-up.
One last question. What is the most valuable operation a digital assistant performs in cash application?
It's extracting the remittance data from all the different formats and modes and everything, and puts it into a structured data file, like a CSV file, excuse me. That's the big help. Because remember, think about it in a totally manual operation. Human being has to read the remittance advice. First of all, get their hands on it. Read the remittance advice, key punch that either directly into your AR ledger to clear the invoices that are being paid, or into a file, which is then run through the auto cash engine. So all that can be eliminated, or at least 95% of it can be eliminated. If you've got a high volume of payments, paying a high volume of invoices, this can be a huge labor savings.
Thank you, John. We are almost on top of the hour and through with the session. I'd like to thank all the participants for joining us today, and would like to request you to post any questions that you might still have at info@emagia.com. We'll be more than happy to respond to those questions. And our next masterclass session is on 18th of November at 8 a.m. Pacific. We look forward to seeing you all over there. The topic for our next session is GI invoicing, digital assistant for digital invoicing and payments. Thank you. Thank you very
Thank
much,
you,
John.
everyone. And again, please, if you have any questions, please don't hesitate to submit them. Happy to answer them for you, help you out all that we can. And we look forward to the next session.
Same here. Thanks, John. Thank you all.
So long now.